good morning. I'm pleased to share with you details of our earnings. First for Q4 FY18 and later in terms of the year-ended numbers for the full annualized set of financials. So to begin with, let me start by saying we've had a very robust Q4 for FY18. We have delivered a top line of 1,237 crores, which is up 27% year on year. A strong 30% EBITDA growth of 300 crores and an EBITDA margin of 26%. Net profit for the period was up 2% at 130 crores. Our gross R&D spends were 98 crores, whilst our R&D expenses at a P&L level after capitalization was 51 crores. The gross R&D spends reflect roughly 17% of Biocon's revenues. The amount capitalized, of course, pertains to some of our commercialized programs, especially bevacizumab. Now coming to segmental performance, small molecules saw a small growth of 8% this quarter, delivering 426 crores at the top line. Biologics had a 47% jump year on year this quarter, delivering 241 crores. Branded formulations grew 14% to 149 crores. And Syngene had a very robust performance of 45% growth, delivering 409 crores at the top line. So we have delivered across our businesses. Some of our businesses, especially biologics and research services, had a huge contribution to this growth this quarter. And significantly, we have now come back to good growth because of many of the challenges that we witnessed last year behind us. At an annualized level, we have seen a 6% growth year on year, delivering 4,336 crores. EBITDA was down 9% at 1,035 crores. Core EBITDA margins were at 27%. Net profit was down 39% at 372 crores. Net profit margins were at 9%. Gross R&D spends at 380 crores reflects a 5% decline in R&D spends year on year, whilst R&D spends captured at a P&L level declined 19% to 216 crores. So overall, I think the kind of color I want to give you on the overall business was that last year, our small molecules business was impacted by pricing pressure, and this is reflected in the 8% decline on a year-on-year level from 1,641 to 1,508 crores. We've seen a good increase in biologics this year from 700 to 770 crores, and this could have delivered a better performance, but we have had to take a plant shutdown in Q2 and Q3 in response to certain regulatory requirements after certain inspections were done last year in preparedness for our entry into regulated markets, and this has actually muted the growth potential of the biologics. But you can see that in Q4 we have delivered a 47% increase in biologics growth, so that basically tells you that we are trending in the right direction now in terms of biologics. The branded formulations business grew 11% year on year from 549 to 632 crores, largely driven by our UAE business, where we saw many new market launches this fiscal, including our insulin glargine in the UAE market, which really heralds our first biosimilar entry into the UAE market with Biocon, which is our biosimilar insulin glargine business. And our research services business actually delivered a very strong, robust growth of 19% from 1,193 crores last fiscal to 1,423 crores this fiscal. Um, we've seen a sharp decline in licensing income, which has certainly impacted our profitability and some of our biologics growth. Because if you look at it, last fiscal we had 145 crores of licensing income, largely attributable to licensing activities in terms of our biologics. Whereas this year we have recognized 23 crores of licensing income, which is a sharp decline in licensing income. Um, Going forward, we are confident that we will be able to address an important set of growth opportunities across our businesses. We expect our small molecules business to continue to show modest growth like it has in Q4. We expect our biologics business to continue to show good double-digit growth this coming fiscal, and if all goes well, obviously there are a number of upsides, which are possible in terms of entering Europe and US with some of our biosimilar products. Insulin glargine, as you know, has been approved by EMA as well as by TGA of Australia. So we expect to be in the commercialization mode for insulin glargine in the second half of this fiscal. We have undergone regulatory re-inspections by EMA for trastuzumab and pegfilgrastim. We are awaiting the report from EMA, and if all goes well, again, we would be able to address the European opportunities before too long. In terms of our novels pipeline, I would like to mention that we are well underway in terms of our insulin tregopil trials, the phase 2, phase 3 trials, which have been initiated in many sites across the country. And this is obviously a longer term trial, so we will only get good optics on this trial later in this fiscal, but we will keep you posted on this. We are actually in the process of filing a number of INDs this fiscal in terms of our novel programs. So all in all, we have a very important year ahead. I think we have to focus on meeting market formation opportunities, as well as making sure that we are in a state of preparedness for many of these opportunities. Our biologics facility in Bangalore, which was initiated last year, is well underway. However, this facility will require to be commissioned and validated and approved by the regulatory authorities, and we expect this process to at least keep us ready by 2021. Until then, of course, we will be relying very much on our present operations in India and our Malaysian operations to cater to our biosimilars portfolio for US, European, and of course emerging markets. All in all, I think we've ended the year on a very strong note. We have had a challenging year with the kind of regulatory setbacks, with the kind of plant capacity constraints that we've had to accept. But going forward, we hope that many of these are being, and we look forward to FY19 on a more confident note, and hopefully with many promising aspects to our business being realized in the coming fiscal and beyond. So with that, I will end my comments